Hey traders from around the world, what's going on? It's your boy Jerremy Alexander Newsome with Real Life Trading. Hope you're doing absolutely fantastic and most wonderful. So right now we're actually in the morning day trading room. It is a Wednesday. What day is today? The 24th of August, 2016. It's about 11:54, so we're kind of in the lunchtime hour. Things are a little bit slow. We are looking for some day traders. We got a pretty nice list, as you can see right here. Get ourselves a nice watch list, but overall, haven't found anything absolutely fantastic that we're going to be playing. And I stumbled across this Express trade, ticker symbol EXPR, and I figured some of you might be interested in answering or being able to answer the question, what is exhaustion volume? Something that a lot of people don't talk very much about. And there's also a few different words or terms for exhaustion volume. You might hear the term blowout volume or blow-off volume. I've heard the term climactic volume before. I think those are the three most... I think those are the three most obvious, the ones that come to mind. But anyway, really all it is, kind of makes sense in a way, is it's volume that looks amazing, but is really kind of the finish of the move. Not all the time, right? It's just like everything else we talk about at real life trading. Everything in the stock market works, just not all of the time. But especially if you're dealing with a stock that is very well known and very popular, and especially if you're dealing with a company that's going to be pretty difficult to file bankruptcy, at least immediately. And when I say that, I mean a company that you can go in and purchase a product like today. So if I was off the top of my head, Target. Right, let's say Target just starts getting absolutely wrecked in the next 7 years or whatever, and it's down at $3, and you get some exhaustion volume. That doesn't mean that the stock is likely going to go bankrupt. Now, again, it can, right? So we saw Sun Edison just a few months ago go bankrupt after it got a lot of volume down at the level. So it absolutely can happen. But really, what I'm here to say is, if you're dealing with a company, it's that you can interact with on a day-to-day basis, and you know the company, and you're familiar with the company and its products, and you get a really large volume spike, specifically out of large support or resistance, then it could be exhaustion volume. So the real question is, what is it and how do you play it, and how do you spot it? So the first answer of how do you spot it is going to be based on percentages or math. Now, this is pretty much the only math that I ever do in trading. But it can be just based off the number scale of the stock chart. Percentage is going to be how far has this stock moved in the last year. Let's just say year. How far has the stock moved in the last year? But really what you're looking for is you're going to be looking for a daily and a weekly chart to look back over the last 8 months or so to see in this bearish or bullish trend, how far has the stock gone. So if we're looking at Express, we can hop back over and see this thing has gone from $21 to $12 in the course of, well, really since April. So April to August, was that 4 months? So in 4 months, the company Express has declined right at 40%. Call it 50% for really easy numbers. Okay, that's a lot is what I'm trying to get at. So if you're looking at a trade and you're saying to yourself, man, this trend has just gotten sold off a huge amount. What's a huge amount? I would say 30% or more in the course of the last 6 or 7 months. If it has even more than that, then that's still a lot. So the percentage doesn't by itself mean that, oh, this thing can reverse, or oh, it could bounce here, or oh, I need to be looking to buy. But what I'm asking is, what's the chances of that this is actually exhaustion volume? And the chances are going to be coming from how much has this stock moved in the past year or 6 months percentage-wise. And if it's going up, maybe it has tripled, literally tripled in value. Or if it's going down, maybe it's declined 50% in the last 6 months, which is a lot. So if you get that giant decline or that giant gain followed by a huge gap and a lot of volume, that usually is a sign of exhaustion volume. Now, it just so happens that Express is also sitting at a incredibly good support level. here. I don't think necessarily that Express is going to do this over the next 2 to 3 months, but it could. What I'm going to be looking for down here, and what I like to look for when I'm playing Exhaustion volume, is that little candle right there. That's called a doji. So it's a very small candle, very, very small indecision candle. And when I'm playing an Exhaustion volume or exhaustive move, I'm looking for a doji, and then I'm just going to bracket trade that thing. What a bracket trade means is if I get a doji and I'm looking for it to break bullish, I'm going to get in long, and here's my stop right there. So Exhaustion volume, you play in the absolute opposite direction of what you of the volume and the trend. So when I say Exhaustion volume, it means the move is exhausted. It likely is going to come to a rest because it's moved so far and so fast. Whoever is in control of the trend, either the bulls or the bears, are likely going to give up. So there are 2 types of trades with Exhaustion volume. You have the very, very quick counter trend doji that I like to play. So if tomorrow gets a little bit of a doji on Express, you can bet your bottom dollar. I'll be looking for a pop like that off that support. You could do a day trade, swing trade, a long-term trade. That's going to be the doji play. That's one way. And the other way is if I like the company, I just buy it, add a support, and set a stop somewhere that makes sense for a longer-term play. Because one of 2 things happens with Exhaustion volume the vast majority of the time. When I say the vast majority of the time, let's just say somewhere mid 70%, and that's an unverified, unsupported statistic that I'm just making off the top of my head. But based on my experience, I'm just throwing out a number that makes a little bit of sense to me. The 2 ways that happens with Exhaustion volume is you either get a quick reversal or you get this boring, monotonous, just blah, 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 where it just trades sideways for like 4 months. But again, for a longer term trader, or what also could be called a contrarian trader, these are really, really good plays. Let's look at the difference between this gap that we have here. So we're down about 40%, huge, massive, massive amounts of volume out of support, and this gap right here, right, that actually caused some lower lows. So what's the difference between the 2? Well, hopefully you can see them, that this move obviously was a large gap, but the trend was bullish at the time. So when you get a bullish trend and the stock gap's down, I'm sure most of you have watched my videos by now, this is called a gap and go. And you can see that everyone and their mother is trapped on this trade. They're losing money, they're panicking, and they're selling the stock short. That's a lot of money-making opportunities for a bearish position. So that's the difference, is this gap right here that has similar volume and a similar gap size and everything like that is occurring after the trend's been going up, so it gaps and traps. This one over here, the trend has been going down. Right here, it has been going up, granted, and that's why we did sell off today, because you are trapping some people. And that says to me, since it has been going up the last few weeks, is instead of a really, really quick reversal on Express, we're probably going to get that. We're probably going to get that longer-term move. I got someone who just made a comment in the chat pane. He goes, "Just got back from lunch. Sound like Jeremy's video teaching voice." Yeah, we're doing a video really quick. Oh, that's funny. So that's Express. That's kind of the Exhaustion volume. Let's look at another one really quick. This is Linden Club, ticker symbol LC. And this is one that I called way back when. I say way back when, whenever this gap occurred back in April, May. So Linden Club, it's a peer-to-peer lending company. I use Linden Club. Fundamentally, it doesn't make sense to me that they're going to go bankrupt anytime soon. I mean, they're pretty much the same as a bank. So banks don't go bankrupt that often. So when this stock is trading down, I'm looking at this thing and I'm just seeing it getting hammered. Boom, 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 boom. Just getting absolutely wrecked, right? Okay, so math. It's gone from $26 to $5, so it's decreased like 75% of volume, percent. And then it gets this volume. So this volume came in right here. Boom. That volume, and I'm saying to myself, that's Exhaustion volume. Exhaustion volume. I'll link, just to help you guys out, I will link to that video in the description box below. So if you check out that video, I'll link to it where I show you, and I'll even put in the time that I'm mentioning it. That's definitely exhaustion volume. And I did try to play this doji. So here's my doji, and I want everyone here to know I played this as a quick aggressive trade, and you know what? Guess what happened on it, ladies and gentlemen? I lost a risk unit. I lost on the trade. I know most teachers don't talk about the losers, but I did. I straight up lost. Lost in one day. I lost an R. I was like, interesting. Okay. So then I saw this candle. And that is my one white soldier candle at an all-time low after what I thought was exhaustion volume. Boom. Shakalaka. So that was my setup for the longer term level. So longer term, still in Linden Club, actually added some funds to it yesterday or 2 or 3 days ago. And yeah, so that's a longer term trade based on exhaustion volume. I like the company. I'm a member. This is definitely a strong gap, but that volume to me was like, for a day trade, sure. I was looking at playing it short that day. But for the swing level, that's what exhaustion volume is, when the stock just moves too far, too fast. Trying to think, does anyone have here in class with us right now, can anyone think of a bullish example of exhaustion volume? I'm going to pull up Skechers. This is the most recent one I can think of, and we'll look at it momentarily. But right here on Skechers, after this stock had pretty much more than doubled, on this day right here at the all-time high, it's never been that high ever, you get some volume. Now, this volume isn't a huge volume bar, that I agree with. I was hoping actually for more volume. So I did think at that time on that gap, I was like, you know what? The end is near. But it's not going to happen today. So wait for the doji, wait for the reversal candle. And wouldn't you know it, there was the doji right there. And there's my stop. And that time, Harry Potter helped me out by like a penny. He came in and wizarded that one down. Almost lost on that trade too, but it actually did end up working relatively well. I took that trade for one R on that day, and then you got your Morningstar reversal pattern right here. There's your 3, 1, 2, 3, entry, stop, and that's the other one I played for a really quick move on Skechers. Now, I didn't long-term short Skechers. Wish I did, but I didn't. At the time, Skechers actually had a split. At the time, it was like I actually forget now. Was it $200? It was a 3-for-1. Yeah, so it was like a $150 stock. So I didn't short it on a long-term level. I was just in and out based on that, what I thought was exhaustion volume. So pretty much huge trend in either direction, bullish or bearish. And you're like, wow, when is this thing going to end? So here's another bullish example, because I can do bearish examples all day. Here's a bullish example, present day, on Nvidia. So Nvidia, since, I don't know, March, has tripled. Right? This thing has tripled. And this gap I actually did not think was exhaustion volume, because it had rested for a while, and it had a nice little bearish gap, and it gapped to all-time highs. I did think on that day, and I will admit that I was looking to consider fading that trade for a bearish trade on the day trade, because I was like, well, it could be exhaustion volume, right? There's always the could. And you know what happened? Tried taking a bearish trade on it and lost, like, it was break even. It was such a very, very small loss that didn't even happen. And then when that candle closed above the all-time high, because it had been there before, we mentioned that was a perfect bullish gap and go, textbook, and it was very, very strong. So that's what caused this thing to absolutely run to the wind. So now we've got some, what I do consider to this to be exhaustion volume up here. And you do have your evening star reversal pattern forming. I am going to look to short Nvidia up here. So by the time you watch this video, either days, weeks, months, years down the road, you can see if that trade worked. I'm not trying to, buy a Lamborghini on this trade. All I'm trying to do is make my risk unit. So if I'm willing to lose $1,000 on this trade, that's how much I'm going to lose. I hope to make more than that. So in trading, if you can control your risk, that's really the most important part of your plan other than following it, right? Create the plan, make sure the plan includes how small of an amount that you're willing to lose on the trade, and then follow the plan with good discipline and go from there. Because, exhaustion volume, I know everyone always likes to try to pick the tops of a trade. Exhaustion volume will help if you're looking at picking a top or a bottom. I know people love trying to do that. That's something that will help. Dean says, as a day trade, I wanted to fade Visa at the all-time high. I had a textbook 5-minute exhaustion candle yesterday. So here's 5-minute. And what Dean's mentioning is this actually works for a day trade as well. And I appreciate you bringing that up, Dean. So if I come over here to a 5-minute chart, we'll talk about it yesterday. Here is what Dean's referring to. So again, this resistance level, I didn't just draw this in here yesterday, this 81.57, and I've had that price in for a long, long time. Ladies and gentlemen, if we look at this candle with this volume, Dean is spot on. That is unequivocally, without question, exhaustion volume. How is exhaustion volume created? What do you guys think? People who are in the room live, if you're watching the video right now, go ahead and put in the comment section below, how do you think exhaustion volume is created? You might be quite surprised. Maybe you will, maybe you won't. I don't know. How do you think exhaustion volume is created? Zane says it's created by sentiment shifting and battling. Yeah, that is true. Very, very philosophical answer, but it's true. Zane says, and FOMO. Yep, that's kind of about it. Newbiness. Exhaustion volume is almost, and this is a shame. I know it's terrible. It's a really, really good mix of professional traders exiting and new traders hopping on. Because what a new trader will do is they'll see a trend and they'll be doing this. Okay? And the new trader is like, man, I should get in here, but I need more confirmation. Well, I need a little bit more confirmation. All right, it's kind of moving in my favor. I'm going to consider getting in now. Well, now I'm missing the trade. Now I'm chasing it. Man, when's this thing going to slow down? I want to buy the dip. When am I going to get a chance to take this trade? Oh my gosh, this thing is on a tear. Oh my goodness. Is it ever going to stop? All right, keeps going up, keeps going up. I'm missing this entire move. I knew I should have gotten in way the heck back here. I'm getting in now because it's going to keep going higher. Beep. Bam. Exhaustion volume. That's exactly what happens. So remember, I'm not saying that to make fun of anybody because that has happened to everyone, every single trader, especially me. I unofficially hold the Guinness World Book of Records for buying silver at the highest it ever was. That's exactly how I felt. Just missing the trade, not getting in. Remind yourself, if you can remind yourself anything in trading, especially if you're a newer trader, buy low, sell high. All right, buy low, sell high. So if you're looking at the trade, and you're like, man, I should be getting in here. Ask yourself, is this trade already done? If you even think you're chasing the trade, the answer is, well, it's in your question. You probably are. Dean says it's often a target area where lots of people are waiting to play above and pros are waiting to sell. Agreed. Dean says another name for exhaustion volume is novice volume. It can be novice volume because it can also be, again, professional or hedge funds or whomever exiting at certain prices. That's what creates it. Dan says, how does that work when it's on earnings? Doesn't volume usually spike? Yeah, and so just like, I don't know if Express was earnings related today or not. I don't think it was. It might have been, though. Express plunges after weak Q2 sales, sore traffic. Yep, so this is earnings. So this earnings gap right here, it is created from earnings. This is a lot of people. Usually your retail trader, your person who just has Express and they've bought it, and they probably bought it right here, potentially or hopefully. That's when they're exiting. So yes, earnings absolutely creates volume spikes. A lot of people running in, and that's why I love earnings so much because it gives you a lot of opportunities. It gives you swing trading opportunities and day trading opportunities. So yeah, in this particular setup, based on this gap, it is an earnings gap, I believe. And with that amount of volume and that location, I will be looking at playing Express as an exhaustion gap. Macys, not too long ago, was kind of one. I felt like it was right here. right there on this gap. So again, you had huge volume. And if we look at the trend, right, for the past 6 months to year, so Macys went from $70 to $30. That is a 50% decline in volume. And so that's why this particular gap, right, a lot of amateurs are going to hop on down here. But again, do the math and do the percentages. If the stock has moved 50%, and it's a stock in a company that you can go out and purchase stuff tomorrow, and you get this ginormous volume at a really all-time low or 3-year low or whatever, just be cautious down there. Because in the stock market, another thing that you can write down and remember forever, if it's too good to be true, it probably is. And that goes more for life than the stock market, but works for both. Yeah, so down there, here's how I was looking to play Macys. I was looking for it to, this is a retest gap anyway. So I was looking for it to retest and get bearish right here at that resistance. Made some money there. It traded up, and it did again. The exact same trade worked twice. And then when it traded back up, right, and broke through that resistance, that's when I, in hindsight, went back and said, yep, that's exhaustion volume. So even I was looking at it, I'm like, guys, this could be exhaustion volume. I didn't ever put a stamp on it. I was never like, boom, guys, that's what this is. Until like 2 months later. So don't worry about calling it that day. There's plenty of opportunities. Now that we know that that's exhaustion volume, and this is probably some type of really good breakout gaps or breakout volumes on Macys, and this could really move. This is a bullish gap and go right here. I am looking, and we're keeping a very close eye on trading Macys bullish kind of coming into here, because this is exhaustion volume. Here's your accumulation phase. By the way, I got to give a shout out to my buddy Robert Meek. So Mr. Robert Meek looked at that morning star reversal pattern right there and played that bullish. So he ran it up into here bullish, taking that particular trade. So anyway, that's exhaustion volume. That's what it is. That's where it comes from. And that's how it can be played. Hope this was helpful. If you have any questions, feel free to post in the comment section below. You can always email me a question or a breakthrough moment or a light bulb if it went off. Email me at jerremy@reallifetrading.com. I'm also on Twitter at Newsome Nuggets. I'm on LinkedIn. We're on Facebook. The mission of Real Life Trading is to enrich lives, ladies and gentlemen. And we try to do that throughout the entire world. Help people understand what the stock market is, how it works, and how you can use it to make money and do so over time in a controlled manner using proper risk and discipline and invoking incredible patience. Having a fantastic day, week, night, year, month, quarter, century, whenever you're watching this video. You absolutely rock. And until next time, remember, love life, live life, and trade it. I'll see you later. Bye-bye.